Okay. Hi, my name is Miss Malia, and I'll be taking you in banking today. Banking theory, law and practice. This is unit one of this unit. So we'll start by looking at a brief history about banks, which is origin of banks. So there has been different opinions in this regard, and according to some authors, the word bank is derived from a Greek word, which is bankos, or bank, that is a bench. So during ancient times, banking used to be done on benches. The monetary transactions of different people used to be done on benches. But due to some evolutions in different countries, some infrastructure was built for the safe transacting of the money. So the Jews in Lombardy transacted their business on benches in the marketplaces. But now we can agree with me that during this time, the monetary transactions are now being done in infrastructure. So now we look at what the meaning of the word bank is. The bank is generally an institution which deals in money. But what some other people forget to state is that this institution is not just an institution, it should be licensed to receive deposits and make loans for its customers. Having looked at what a bank is, we'll go ahead and look at what the meaning of the word banking is. So banking is simply the business conducted or the service rendered by a bank. So this is a common exam question. If you're asked the meaning of the word banking, just simply states it's a business conducted or a service rendered by a bank. So we'll go on and look at who a banker is. A banker is an individual who carries on the business of banking. So what are these businesses that a banker carries on for a banker? So these include conducting current accounts for his customers, paying checks drawn on him, as well as collecting checks for his customers. I will go on and look at the economic functions of banks. So the first one is issue of money in the form of banknotes. The current account subject to check or payments at the customer's order. So this is the issue of money, one of the functions which a bank does. So these claims on banks can act as money because they are negotiable or payable on demand and hence valued at par. They are effectively transferable by mere delivery in the case of banknotes or by drawing a check that the payee may bank or cash. The second function that the bank does is netting and settlement of payments. Banks act as both collection and paying agents for customers, participating in interbank clearing and settlement systems to collect, present, be presented with, and pay payment instruments. So this enables banks to economize on reserves held for settlement of payment, since inward and outward payments affect each other. It also enables the offsetting of payment flows between geographical areas, reducing the cost of settlement between them. We'll go on and look at the third function of banks, which is credit intermediation. So just like from the word intermediary, banks borrow and lend back to back on their own accounts as middlemen. The fourth is credit quality improvement. So banks lend money in ordinary commercial and personal borrowers, but are high quality borrowers. The improvement comes from diversification of the bank assets and capital, which provides a buffer to absorb losses within defaulting on its obligation. However, banknotes and deposits are generally unsecured. If the bank gets in difficulty or pledges assets as security to raise the funding it needs to continue to operate, this puts the note holders and depositors in an economically subordinated position. So the last function we have here is maturity transformation. So banks borrow more on-demand debt and short-term debt, but provide more long-term loans to its customers. In other words, they borrow short and lend long. With a stronger credit quality than most other borrowers, banks can do this by aggregating issues, for instance, accepting deposits and issuing banknotes and redemptions, like withdrawals and redemption of banknotes, maintaining reserves of cash, investing in marketable securities that can be readily converted to cash if needed, and raising replacement funding as needed from various sources. For instance, um, wholesale cash markets and securities markets. So now we'll go on and look at the classifications of banks. So the first 7 will be explained in this lesson, and the last ones, which are in red ink, can be considered as an assignment for research. So the first one is universal banks. Universal banks, these are known as financial services companies which are engaged in several of these activities. These are much diversified groups. Among other services, which also distributes insurance, signifying that both banking and insurance are provided by the same corporate entity. Hence, the term is also known as bank insurance. The next type of bank that we have is commercial banks. The term is used for a normal bank to distinguish it from investment bank that is only engaged in banking activities. These banks mostly deals with deposits and loans. The next type is thrift bank, a bank whose main purpose is to take deposits from customers and make mortgages. Thrift banks typically don't bother themselves with corporate banking, brokering, or underwriting. It is a general term for savings banks, saving and loan association, and credit unions. The next type of bank we have is rural banks. These are regulated banks that provide financial services and credit to underserved markets or rural areas to develop them. They are to liquidate rural indebtedness and direct the credit flow of their really needy and small marginal farmers in the rural areas. The next type of bank that we have is cooperative banks. So the cooperative banks, these are used to remove user is money lender who exploits poor, helpless agriculturists and etc. This bank is started at village level or at rural level with maybe 10 or more persons. Then it aims at promoting thrift among farmers and mobility deposits, loans given to members only. The next type of bank we have is the Islamic banks. Now, these banks, the Islamic banks, they transact according to some Islamic principle that they follow. These banks adhere to the concept of an Islamic law. So this form of banking revolves around several well-established principles based on Islamic canons. All banking activities must avoid interest, a concept that is forbidden in Islamic. Instead of bank ends its profit, sorry, instead the bank ends its profit and fees as the financing facilities that it extends to customers. So basically, this type of bank follows some principle, which is um, the Islamic law. The next type of bank we have is the central bank. The central bank is normally a government-owned bank. Like for instance, in Zambia, we have the Bank of Zambia as the central bank. So this type of bank is normally government-owned and charged with quasi-regulatory responsibilities such as supervising commercial banks or controlling the cash interest rates. They generally provide liquidity to banking system and act as lenders of last resort in event of a crisis. So we'll now move on to the roles of banks in economic development. So the following are the roles. I'll just read them out and in the next slides they'll be explained. Mobilization of resources is one role of banks in economic development. Banks promote capital formation, that's the next one. The next is promotes industry development. Then financing priority sectors, promoting balanced regional development, expansion of credit, financing the right type of industry, promoting growth with stability, helping traders and industrialists through a variety of agency and general utility services. So we'll now look at these roles that the banks hold in the economy in detail. Mobilization of resources. A well-developed banking system mobilizes the small and scattered savings of the people, but for this function performed by commercial banks, these sums of money would lie idle and inactive. Banks utilizes these savings by granting loans to enterprises connected with economic development. So banks make sure that they mobilize their resources so as to help the economy of a nation to develop. The next is banks promote capital formation. Capital formation is of strategic importance for economic development. Capital deficiency retards economic growth. Banks play a vital role. Deficiency retards. Banks play a vital role in economic growth. Banks play a vital role in removing this capital deficiency by stimulation of savings and investments in the economy. By offering variety rates of interest on various types of deposits, they attract all segments of the society and promote savings habits among them. These savings are then coincides with the phenomenal increase in bank deposits and increasing advances to trade, industry, as well as agriculture. The next is promotes industrial development. Modern commercial banks have shared their modern commercial banks have shared their their conservatism, and have embarked upon innovative schemes. Besides advancing medium-term loans and underwrite in industry securities, they also manage their capital issues and thus enable them to secure sufficient capital for their expansion and modernization. By guaranteeing deferred payments, the banks help industries in getting equipment from abroad. The next one is financing priority sectors. The commercial banks, the commercial banks progress the commercial bank's progress has been made by banks in the extension of credit to agriculture, small-scale industries, self-employed persons, etc. Besides financing corporate primaries, besides financing corporate primary societies, banks also finance agriculture directly. Thus, banks help the thought of neglected sectors so that there would be around economic development. The next is promoting balanced regional development. Banks collect deposits in developed regions and make them available for investments in, in underdeveloped regions of the country. So, for example, if Lusaka is more developed than the Copper Belt, banks will ensure that they collect as much deposits as they can in Lusaka and make them available in the Copper Belt, which is less developed than Lusaka, so that the economy can develop well. The next is expansion of credit. So through the mechanism of credit creation, banks make available more funds for development projects. Expansion of bank credit leads to increased production, generation of employment opportunities, increased prosperity, thereby facilitating faster economic development. The next is financing the right type of industries. So how do banks do this? So by channelizing their funds in certain directions, banks help shape the economic development as per planned priorities. They make funds available to those industries whose growth is considered essential for the country's economic advancement. The next is promoting growth with stability. Through the through their influence on the rate interest, they can regulate the rate of investment. If if a dear money policy helps economic development at too great a speed, they will raise bank rates under the direction of the central bank. Similarly, they will encourage investments to a lower rate when the speed of the development slows down. Thus, banks promote growth with stability. The next one we'll look at is helping traders and industrialists through a variety of agency and generate utility services. So the subsidiary services of a modern bank help the industrialists and traders enormously. The check system reduces cash handling significantly, cheap remittance facilities by means of draft, mail transfers, and telegraphic transfers are a boon. Acceptance of valuables of safe custody, collection and payment of checks as well as bills. Provision of credit information, their export finance, all have encouraged both internal and international trade. We now look at the functions of commercial banks. We have a number of them. The first one we'll look at is accepting deposits. So the fundamental function rendered by a modern banker is accepting of deposits from the public. So it is the duty, or rather a function of the commercial bank, to collect savings of the community by accepting deposits from them. A banker in general accepts deposits of the following types. So we have three types. The first one is fixed deposit account. The second is current deposit account, and the last one is savings deposit accounts. So we'll look at these three deposit accounts in detail. The first one, which is fixed deposit account. So under the fixed deposit account, money is accepted from the public for a fixed period of time. This is also called time deposit or term deposit. The money so deposited cannot be withdrawn before the expiry a certain fixed period of time. This type of deposit account carries a rate of interest that is higher than other deposit accounts. So that is why some people prefer to use fixed deposit accounts because of its high interest rate. So when you deposit money in this type of account, you get a higher rate of interest than in the current deposit account or savings account. So this type of deposit account also has a longer period. Um, the deposit account matures at a different future date and entails an interest penalty if there is a withdrawal made before um, the expiry date. No check facility is available for this type of account. Then the next account, which is the current deposit account. Under the current deposit account, the depositor can withdraw the money from his current account whenever he needs, whenever the need arises. So this is different from the fixed deposit account. When you withdraw money before the time elapses in fixed deposit account, there are some penalties that will be charged. But in a current deposit account, um, the customer of the account holder can withdraw the money when they need it. So since it is a floating deposit account, no interest is paid by the banker. This type of account is preferred by businessmen who may have to withdraw money several times a day. So you see why this type of account is more suitable to businessmen than fixed deposit account. Because with a current deposit account, whenever a businessman has an urgent issue, they can be able to make their withdrawal even, let's say at any time they want to withdraw the money they need. But with a fixed deposit account, that is not possible. So some common exam question can come in this, um, which can read, what's the difference between current deposit account and fixed deposit account? The answer remains the same, just like that. Same. So, unlike fixed deposit account where no check facility is available for this type of account, with the current deposit account, um, the deposit account is extended with a check facility. So the third type of deposit account we look at is the savings deposit account. So under the savings bank account, a depositor can make deposit of money any number of times in a day. However, there are restrictions on withdrawals that can be made from this account. For instance, withdrawal of only a specified sum of money is allowed in a week. So, for instance, um, the restriction may be that you can only withdraw maybe 500 in a week. So this is what it means when you take some restrictions with withdrawals that can be made. So This type of deposit account offers check facility, just like the current deposit account, but with fixed deposit accounts, there's no check facility. So the savings deposit account offers a tiny rate of interest. The purpose of savings bank deposits is to encourage the habit of thrift and small savings among the people. So the second function commercial banks will look at is advancing loans. Another fundamental function of a banker is to make advancement of loans. Out of the deposits collected from the public, banks they mark certain portion um, as cash reserves. The balance of cash available with them is lent out to the needy customers. A banker looks into the creditworthiness of the borrowers before making advancement loans. So creditworthiness, what this means, let's take for instance, if you have a loan with Barclays Bank, then you want to go get another loan with, let's say, Zanaco. Um, the the bank, which is Zanaco, will look at your creditworthiness if you have other loans outstanding, or they'll look at whether you are an individual who can be able to pay back their loan. That is how they look at the creditworthiness of the person. So with advancing loans, there are some various types of loans that can be made by the banker, which are demand loan, cash credit, overdraft, and discounting loans. So when we first look at demand loan, a banker makes demand loans of specified sum of money against some collateral security. The loan money which is credited to the account of the borrower is withdrawn as per requirements. These loans are callable at the option of the banker. The second type of loan, which is cash credit, under the scheme of cash credit, banker allows to withdraw money from time to time to a certain limit determined by the value of stocks, which can be securities kept in the borrower's godown. The borrower continues to withdraw small sums of money according to his requirements and within the credit limit sanctioned to him. For this purpose, the godown remains in the possession of the bank. This type of loan is very popular among the Zambian businessmen. The next type of loan which can be offered by the bank is an overdraft. An overdraft is also a loan. So under this scheme, the banker allows the borrower to withdraw his account through checks. I mean to overdraw, sorry. The banker allows the borrower to overdraw. Let's say you have 50,000 in your account, and then what you need is 80,000. So with this type of loan, the bank will allow you to overdraw by 30,000 from your account. The facility is granted to respectable and reliable customers. Interest is payable by the borrower only on the amount overdrawn by him. So let's say, like the example I gave, you have 50,000, then you overdraw by 30,000, which is 80,000. Interest will not be charged on your 50,000 because that is your money. The interest will only be charged on that additional 30,000 which you have overdrawn from the account, which belongs to the bank. So this facility is available only to current account holders. The next is discounting of bills as a type of loan. Under this scheme of discounting bill, the banker provides financial accommodation by discounting eligible first-class commercial bills of exchange. The banker charges commission, and the balance amount of bill is provided by way of loan. The banker secures payments of the bill from the drawee on the maturity dates of the bill, where the banker is in need of cash to transact its activities. The commercial bills in its custody may as well be rediscounted with the Apex Bank. So we'll go on and look at the third function of commercial banks, which is investing funds. A modern banker, besides advancing loans, also makes an investment of its surplus funds in government securities, bonds, stocks, etc., and earns interest on them. This is done both on regulatory as well as on commercial grounds. The fourth function of commercial bank, which is promoting banking habits, one of the important services that a banker is called upon to render is to help promote banking to people. This is done through frequent advertising campaigns or new account opening, deposits, acceptance, and the like. But besides this, banks also assist in development of the bill market, which is an important constituent of the financial market. The fifth function of commercial bank is agency services. So the agency function of a modern banker involves um, execution of standing instructions of customers. The commercial bank renders the following agency functions on behalf of their customers. So as an agency, the bank may receive instructions from its customers to, for instance, transfer funds from one account to the other on behalf of its customer, fund collection, portfolio management, and collecting dividends on behalf of its customers. So we'll look at these mentioned one by one. I'll first start with the funds transfer. Funds transfer is an essential agency function that commercial banks perform for its customers, as it helps customers in transferring funds from one place to another, let's say from one account to another on behalf of its customers. So the transfer is facilitated through instruments such as bank drafts, traveler's check, and the like. For instance, rendering this service, banks collect a small commission from the customers. The second agency service performed by a commercial bank is funds collection. So this is another important agency service rendered by a banker to collect funds on behalf of customers from other banks and credit them to their account. The third one is portfolio management. This is a typical commercial banker also provides portfolio management services in that they indulge in purchase and sale of securities on behalf of their customers. Securities include both of the corporate enterprises and the government. Then the last agency service that the commercial bank performs on behalf of its customers is collecting dividends. Acting as an agent of the customers, a banker undertakes to collect dividends as well as interest on the shares and debentures of its customers and credits them to their customers' accounts. The next agency function is premium payment. An essential agency service rendered by a bank is to undertake to make payments of premium in respect of insurance policies of customers. This happens on directives of customers. The next agency function is trustee and executor. So this function is also essential. It's very important because as an agency functions here, the bank renders a modern sorry, trustee and executor. It's another essential agency function which is performed by the commercial bank. So here the bank preserves the will of the customers and executes it after their death. The next is income tax consultant. In many cases, a banker provides consultancy and advice on matters relating to tax management of its customers. So here banks may even undertake to file income tax returns of its customers or payments for certificate fee. The next one is acting as correspondents. As correspondents to customers, bankers may also obtain passports, travelers' tickets, and even secure air and sea passages for the customers. And then the last one from the agency functions that the commercial banks performs for its customers is foreign exchange dealings. So commercial banks, in addition to their traditional functions, also undertake the business of buying and selling foreign currencies on behalf of customers. So this is carried out through their foreign exchange. This is carried out through their foreign exchange divisions. The sixth function is general utility services. So in addition to the offset functions, to the offset agency services performed by commercial banks, banks also extend the following general utility services. The first one is self-custody service. So modern bankers provide local facilities to their customers where they may store their durable goods for safekeeping. Then the next is issue of traveler's check, which will already get out in the agency functions of banks. Then the next is credit information, an important general utility service rendered by a bank is to furnish reliable information about the creditworthiness of their customers to those who are in need of such information. This is made possible on account of the acquisition, sorry, in account of the acquittance of the customer enjoyed by the banker. Other functions include business information. So it is also a function of the commercial bank um, to assist its customers with business information. Let's say if there is a new type of account that has been established by the bank and calling for customers to open such type of accounts, the bank has to provide all the necessary information that the customer may need. The next service is an underwriting service. A modern banker also undertakes to subscribe the issue of debentures made by corporate entities. This way, banks provide much needed guarantee and confidence to the investing community to subscribe the issue. The facility is made available by charging a small underwriting commission. Then the next one is acceptance service. So similar to underwriting service, banks also extend acceptance service. This in regard to the genuine trade bills of other trusted customers. The services involve obtaining the bills of exchange, a certificate, and a standard guarantee, which in turn enables the customer to discount the bills in the money market. The seventh function is credit creation. So banks help in creating money. In Zambia, the bank that prints out the notes is Bank of Zambia, which is the central bank of the state. And by doing that, they help in creating credit. The eighth is realization of social economic objectives. Commercial banks play a significant role in helping the economy of a country in realizing its socio-economic goals. This is an absolute necessity in view of the need to support the various policies and programs of the government with adequate and timely funding. So banks also engage in tasks of provision of credit to the sectors identified as desirable by the government for the purpose of achieving certain socio-economic objectives such as reducing inequalities of income and wealth, removal of poverty, and the elimination of unemployment in the country. So that will be all for the first class, children one. Thank you so much.